Hey everyone, welcome to another Monday. We've got our FogCutter live coming at you where we are here to help guide you through all the noise and the chaos that you'll run into as a trader, as an investor in the financial market. So I'm Mike Curtis here with Preston James, founder of Traders Edge Network. Preston, like always, we're excited to kick off another week of trading.
So excited. This is becoming really fun, I think, for both of us, just to get the week started off
Absolutely.
great. And this is what we kind of do in our doorway anyway. We thought, why don't we
Turn on the camera.
film what we're talking about to start a week anyway? So it's really fun. It's awesome to be here with you. You have a different background behind you there, Mike.
Yeah, coming at you down here for a little birthday trip. So down in Mexico, got the ocean behind me. So
Doesn't
gonna
look
get
like
this.
Utah. Yeah, I thought that's not the Great Salt Lake.
Yeah, we're gonna knock this out. Then we're gonna go enjoy some time on the beach and relaxing. So
Good for you.
yeah, we got a big week on tap, Preston. First off, a company that we're just always keeping tabs on watching, Apple. They've got their worldwide developer conference kicking off today. We've got US and China having some tariff trade negotiations. I believe they're doing that in London. Is that my memory serves me as I've been?
They are.
Okay, I've got a little guacamole hangover as I've been down in Mexico here. So
That's
they're
the
doing that
first
in
time
London.
those two words have ever been said that in my whole life, I'm older than you. I've never heard the two words put together, guacamole hangover. I'm just going to leave it there.
And then, of course, a couple big on the economic news front. We've got CPI, which is the Consumer Price Index, which is the Fed's gauge of just consumer prices, which of course is an indication on inflation. That one's going to be as watched as probably ever with all the tariff news and back and forth, and people are going to want to see how that actually impacted the consumer prices. That's on Wednesday, I believe. Preston, is that right?
Uh-huh.
And then Thursday, we've got the Producer Price Index, PPI, which is more of the pricing at the producer level, the wholesale level. And that, of course, can also be an inflation gauge. So lots to talk about, lots to dig into. So, Preston, let's start just talking about last week. The market's covered some ground again. It's been in a little more of that choppy back and forth, kind of more of a grind climb higher. But we saw the S&P break above 6,000 for the first time since February. Everything closed just a little bit higher. Monday, we had the good news from the jobs report. So what are you seeing out there?
Oh yeah, well yeah, Friday we ended on a even more of a bullish tone to end the week. Uh and let's maybe start right there, and because I wanted to credit a guy named Jeff. He's one of our WoW insiders. He pointed something out on an early morning Saturday email to me, and it just, I don't know, there's just such a fun power of having a network. It's in the name, Traders Edge Network, right? I mean, and we learn from each other. And just when you think, oh, pretty much seen all this news and market cycles and everything, but he pointed something out that I just really haven't thought of before. I mean, it dealt with one of our, actually several of our positions, but one in particular. Basically, we had a money press, and we have one going currently on ticker symbol APP, APP. A is in Adam, P is in Paul, P is in Paul. And it ended the week extra strong on Friday. And we decided to not roll the weekly part of our money press, which is the cash generator, into next Friday. We did not roll it on Friday. So what that means is we collected a full, it was close to a $20 premium last week, Mike, that we were able to pocket, but it kind of ran away from it.
Mm-hmm.
And we thought, wow, this has covered a lot of ground. And just basically on that, we don't do this often, but we decided not to roll the weekly and the money press strategy, which
Right.
meant we hung on to the protective put, the one that's out there in time,
Yep. Just the long put,
the
right?
long put. And what Jeff pointed out, and he said, oh my gosh, the timing, what you guys decided to do. I don't know if you're noticing this, but in after hours, apps down like $23, $24 a share. And we had even brought up that, hey, this stock this is one of our wild child positions right now,
Totally.
but because it covers so much ground, and we had even mentioned on the Friday webinar, like, man, this thing can move 10, 15, $20 a day without really even a blink. It's just that kind of stock. It does not make staplers and staple guns. I mean, no. So, and which is fine. I mean, you don't want to have all your positions like that, but I like mixing that in because we have quite a few money presses going on right now in lots of different sectors. But all to say, his pointing out was it's down because there was a decision coming up on including more companies being added to the S&P 500. And because the S&P 500 is named that, consequently, that does mean that from time to time companies drop out of the S&P 500, and this is just the market being the market. There's some companies that have been in and enjoyed a ride for a good couple decades, and now they don't really qualify for it anymore. But there was a list of companies, about 20, that were up to be added that could have been any one of those, and App was the number one company being considered for inclusion, but they decided not to. So it dropped on that. It sounds like you want to add to that. I think I'm talking too much, but consequently, we didn't sell the put. App was down $23, $24 after hours. I think right now, live here on Monday, let's just check where it is. It's down $90.
Right.
Oh, go ahead, Mike.
Yeah, no, and one of the advantages of being an individual trader and investor is we can be so nimble, right? Big institutions can take days or weeks to get into or unload positions where, Preston, the traditional money press, right? When we sell a put, we also own a put for our protection. But when we sell the weekly put, that's the income generator. That's the bullish side of the trade. Well, bullish to neutral, really, because it can make money if the stock goes sideways. It can make money if the stock even goes down a little bit. But then kind of the sweet spot for the money press is what we've seen these last 2 weeks, just kind of a slow climb higher. But App got a little hotter, right? It really covered some ground. So what I love about the money press is Friday you were bullish, right? You had your normal money press going, a bullish to neutral option strategy. And then by just not selling a put this week yet, you still could, right? You could sell one today, you could sell tomorrow.
I did. I sold one today.
There you go. So you let it sit for one day and now the price corrects. And it's like, the old adage, buy low, sell high. You let the trade run for what, 3 hours into the trading day today. And you're now pretty much buying back in at a $20 lower price. And we have that advantage because we're these individual investors, because we can be nimble, but then also the money press strategy, you can still be very nimble by just not selling that weekly put and keeping that protective put. You can flip it like that into just a directional bearish trade. Maybe that's only for a day or a few hours, but now you're set up in a much better situation going in to the rest of the week. So yeah, big shout out to Jeff for seeing that and catching on to that little bit unusual adjustment that you made this week.
No,
but again, I just think it speaks to the power of, being an options trader and the flexibility of some of these strategies.
Exactly. And defining before you even put a trade on, having it very defined.
Right.
Of here's where your risk parameters are, naming that and calling that out. And I know, Mike, and it's not normal because I normally like just, hey, there's going to be some ups and downs. Hey, I'm going to sell those weeklies, knowing I'm protected underneath. This was, like you said, a pretty special circumstance. But it does happen a little more often when we're navigating through a market correction, which we've averaged one a year since World War II. Those can be some extra volatile, not can be, they are. They're extra volatile weeks, and it takes about 14 weeks for a correction from where it starts and to come back. It takes most stocks with it.
Right.
But You've been better at this than me during corrections where sometimes you won't sell the weekly.
Right.
And what happens when you don't do that? Well, you're left with a bearish position, but you get the market spiking down some days and you have a bearish position. That protective put explodes higher in value.
Yeah, it can be some of the more lucrative days because
Yeah.
usually, when the market drops, it's kind of like the elevator, right? Dropping 30 floors just like that, where on the upside, it's more of like the stair climb, the escalator, if you will, right? So when you can flip the money press to be a directionally bearish trade, and what you're giving up is just, hey, I'm going to not bring in some income for a few days or maybe a week, and that's the trade-off. But then you have that opportunity to really cash in if there is some of that violent downward price action.
And just maybe putting a little bow on this, if I were to be asked, man, is app worth looking at? Down 20 from where it was. I mean, looking at the medium to long picture, basically this is just a uptrending stock and it's just, coming a healthy uptrending stock is up, higher highs and higher lows. It makes it rather interesting if I weren't in it to take a look. And another name that is also, and think of these companies. These are, well, let me mention the other one.
Right.
Was being bantied about. They qualified to be a S&P 500 company, which
Mm-hmm.
is no small feat. Let's just say to be, to get put at 1,000. It's no small feat to be considered is rarefied air. But
Mm-hmm.
so Hood, ticker symbol for Robinhood, pulled back $4 or $5
Yeah. On
in an
that same
uptrend.
news, right?
I mean, look, I'm already involved with Robinhood. I'm just saying, and I'm not giving any advice. We're not licensed investment advisors, registered investment advisors, stockbrokers, blah, blah, blah. This is educational. No advice is implied here. But just saying, Hood's another one. It's very interesting. It got maybe ahead of itself, and it's not being included in the S&P 500 yet. How did you? So, I mean, just for what that is, wow. I would imagine both of these companies will be included at some point, probably sooner than later.
Definitely. And why that's so powerful, right? If anyone's buying into just the S&P 500 and ETF where there's just tons of cash flow into those, right? There's inflows into those funds. They benefit just a little bit from all of that buying, right? So it
Absolutely.
is a powerful boost to a stock. It doesn't, I mean, are their earnings still important? Absolutely. What they're doing, revenues, all that's still king, but it does give it a little bit of a tailwind when they're added to that S&P 500. So just like app, it's just having a little bit of a rebalancing is what I would say. It probably got a little buzz on the hopes that that was going to happen. And then now it's just coming back and rebalancing and saying, hey, that might be a few months down the road still.
Totally.
So, yeah.
And the volumes today are pretty average. It's not like apps down today on the CFO suddenly leaving or whatever. I mean, it just looks like a go to business profit taking. The volume seemed very, very rational today. Mike, I want to mention also
Mm-hmm.
that starting the week, energy stocks are rather strong across the board, and semiconductor stocks. And there's one that hasn't participated. It's funny. Then that's probably why we have a market. But you think of semiconductors and AI and so forth. Maybe a lot of names jump to mind first and foremost, but one that has lagged behind a little bit but probably has the most pristine balance sheet and because of the patents and the royalties and just where they sit, that is making an awesome move today based on them acquiring a company, and it is breaking them out of a lot of stagnation, is one of my favorite stocks, Qualcomm, as a dividend payer, QCOM. And I'm wondering if we could put that chart up. And because I'm mentioning it, because there's an edge here with how it's acting. And so it's Qualcomm. Maybe let's do a last 1 year chart. And so this very likely has some nice runway here. And as it does so, this company's so mature, it's so many decades old, that it's probably not going to just do this a bottle rocket and
Right.
just, V out of the picture, but it most likely does this in a stair step fashion. And I can't think of a better strategy than something you're probably thinking of as well, to take advantage of something like this. And of course, I'm thinking of the money press.
Absolutely.
And they've got earnings at the end of July. And maybe after a sudden day like this, we may give it the old 3-day rule, like, wow, here's some sudden gap up,
Mm-hmm.
behavior here. And the 3-day rule just allows us to kind of observe, and maybe it gives some of this move back over the next 3 days, just some normal profit taking. But I just like me some Qualcomm, and I wanted to bring this up today because it's
Yeah.
starting
Good
the
one to
week
share.
on such a note.
Yeah, a couple to keep their eye on. So, Preston, before we kind of wrap things up, there's a few companies that we want to mention on the earnings front.
Absolutely.
Kind of put a bow on this one. But before we do that, right, we've covered some ground these last 2 weeks. We talked about how it was a little bit of that choppy climb, kind of 2 steps forward, 1 step back. You talked about how you didn't sell that put on app. You kind of let this morning play out. So are you getting a little more cautious on a lot of your positions, or is this just kind of standard? You're still business as usual,
Oh, business as usual.
full steam
Yeah.
ahead.
Yeah, we're recently out of our yearly market correction. So most stocks are, we're going to have volatility no matter what. Does the China stuff have to work out? Yes. We have riots in Los Angeles all weekend long. I mean, um, just there's all kinds of, man, every time, it's just interesting. You tune into the market, no matter what minute you do, man, it's just seems like a hot mess. Just, you're looking right at the center of all the gears and the pulleys and the flint and the sparks coming off of, where the economy and buyers and sellers are meeting that minute, man. And it's easy to get sucked in. I mean, and I think there's some personalities out there that can't look away. They have to be in there. What's happening the next minute? But so it's just always an interesting thing where if you're going to make decisions and trade, you have to get up close to that. But I also like the distance and letting these weeks unfold. And
Absolutely.
so
And
it's
it
always
makes me
interesting.
think, Preston, one of our favorite trading books, the How I Made 2 Million in the Market by Nicholas Darvis, he speaks to the fact that when he was in New York and he was plugged in,
When he
his
wanted to do it
results
right,
actually
he wanted
suffered.
to do it right and be
Yeah.
plugged in. Yeah.
His results suffered as opposed to just kind of watching it from a distance, not looking at every move up and down and the news in the morning that's completely forgotten about the next day. So there's
And
definitely some
speaking of a
truth to that.
distance, in the 90s, he was a professional dancer. So he couldn't be further away. He would get his quotes from his broker coming down a plane in Venice to do a performance that night. And we just hopped all over Europe and all over the world dancing. So, I mean, we're away from it in Utah, but imagine, that schedule. He literally danced his way to his $2 million profit in the 90s, which today is like 15.5 million.
Yeah,
I had to
pretty
look that
impressive
up.
stuff.
But
Well, so
anyway,
just,
go ahead.
yeah, I was going to say to wrap this one up. So again, keep your eye on Wednesday, the consumer price index. Again, just with coming off the tariff back and forth, that's going to be a little more closely watched. I mean, it's always closely watched. Inflation's always a big thing, especially these last couple of years. But that one's going to be closely watched. I would predict we're going to see a little volatility when that comes out Wednesday. Again, Thursday, we've got some more of that PPI inflation related news coming our way. And then Friday, there's even University of Michigan, kind of the consumer sentiment gets released. So again, that just right here, right now is probably one that's going to be watched a little bit more closely. And then Preston, anything on the earnings front? We're definitely over the peak of the big earnings season, but anything you got your eye on?
Very few, but some very compelling companies. Before the open on Wednesday, Chewy announces earnings. After the close Wednesday, Oracle comes in. After the close on Thursday, two companies, all these have weekly options. Thursday after the close, Restoration Hardware, which I'm really interested in watching. They've really had a hit, almost like Decker Outdoor, DECK. Williams-Sonoma has been down. These retailers that are kind of high-end retailers have really suffered and have stopped their downtrend. And then Adobe after the close on Thursday. And I want to mention one more that was in the running for S&P 500 inclusion, didn't get added, got downgraded today by a very lazy analyst. It's down about $8 today. They split 4-for-1 next week on June 18th. It's none other than Interactive Broker, IBKR. They don't have weeklies, but I'm looking forward after they split and have a lot more shares traded on the daily. I'm looking for them to have weekly options added to them, IBKR. And just interesting weakness today, but again, 4-for-1 split. If you own options on it, your option split 4-for-1. We don't talk about splits that often, but I'm watching them like a hawk. Dutch Brothers Coffee, BROS, just had weeklies added to them. I think it'd be the same with IBKR. So those are other ones that I'm watching. Really, really exciting.
Yeah, good stuff.
Times right now. So yeah.
Well, we gave the folks a few things to go peek at and go consider. We hopefully got you a little more prepared for the week. Think that's a job well done. Preston, anything else you'd add before we sign this?
No, I think if Mumsy could speak a little bit. Mumsy says hi back here. Quartermaster Mumsy. He's kind of our little mascot here. So he says hi as well.
Awesome. Okay, good stuff, Preston. Well, thanks as always.
Enjoy the beach, Mike.
For another week ahead. Yeah.
Absolutely. Enjoy it out there.
Sunblock.
All right. Take care, everyone.
Thanks, Preston.